Let's get the trades on Nvidia and a couple other names about to report. Our trader today is Decatur Capital CEO Degas Wright. Degas, it's great to have you here. Welcome. We're going to save Nvidia for last, and we're going to actually start with Dollar Tree today, which is having another bad month after that dismal earnings report back in May. Although shares are about flat on the year, they aren't immune to those shrink or theft problems plaguing other retailers. They also have to grapple with consumers opting for lower margin staples over discretionary goods. And thanks to inflation, they've had to hike dollar goods to $1.25 and add some higher priced items. Degas, would you be a buyer here?
Yeah, so, with Nvidia, what we're seeing is that we've been owners of Nvidia since 2017. And so, we got in at $73, and now we see a 400% gain. So we are holders of Nvidia, and we would actually be buying Nvidia because as we look at our models, we're seeing that this is actually still in the buy range of what we look at for overall forward performance. And so that's why we really like Nvidia, even at these heightened valuation levels.
Let me circle back to that in just a second. If I may, while we're on the topic of Dollar Tree, I know that's probably not, in the forefront of your mind right now, but are shares of Dollar Tree one that you think could be a compelling investment right now, or would you stay away?
So with Dollar Tree, this is really more of a turnaround story. As you know, Mattel Ridge hedge fund actually purchased about 10% ownership into Dollar Tree. So this is still a turnaround story because they are really increasing their investment in four major areas. One is increasing the wage and benefits of their employees. They're also increasing the supply chain, and they're doing major repairs and maintenance on the stores. And lastly, they're improving the technology around all their systems. So this still may be a little bit too early to get into Dollar Tree, but we would say that let's get past the print and let's see how they do, because the economy, the overall impact on the earnings and revenue can still be impacted by four things. The economy, obviously their customers may be more impacted with the economy, individuals with limited incomes. Also, the cost of the turnaround has a major impact on their ongoing costs, and that still may be a headwind. And then lastly, we saw that with Dollar General, their main competitors, in June, they actually missed on earnings, and that had a significant drawdown on the company. So those are some things that we're concerned about with Dollar Tree.
Sure. All right. Maybe Mantle Ridge can help them for the long run, but you're staying cautious for now. Let me ask you about Splunk, which is a little bit of a teaser for AI as well. The shares are up 14% this year, although down 9% in the past month. The company is also touting its AI implementation, but it's unclear just how many companies are looking to jump on that right now, and its expenses are high. I think we're going to have the CEO here tomorrow. Degas, what do you think about owning these shares right now?
Yeah, so Splunk is a company that what we're seeing right now is that we evaluate this company as really more a market perform. We're not looking for Splunk at these levels to outperform the market. And so we would not be buyers because it doesn't meet our buying criteria. And so what we're seeing, though, is that it does have top quintile profitability, but also there's an issue around will they be able to continue the growth in their annual recurring revenue? And that's a concern because what we would like to see in the print is that they are talking about a 10% annual recurring revenue growth, and we don't know if that's going to happen. If that does not happen, we could see a major decline in the stock after the print. So that's why we're very concerned about Splunk at these levels.